I bet you didn't know a president's credit score can impact your wallet. Did you know that a president's credit score can tell us a lot about the economy? It's a fascinating indicator that goes beyond just personal finance. Think of it like this. The president is like the country's landlord. Just as a landlord's credit score can affect tenants, a president's credit score can impact citizens. A good credit score for a landlord usually means lower rents and better living conditions. Similarly, a president with a good credit score can lead to a healthier economy. A president with a good credit history might mean lower interest rates for us. This can make borrowing more affordable for everyone. Your wallet, their score, how it affects you. Let's break it down. Understanding the connection between a president's credit score and your personal finances might seem complicated, but it's actually quite straightforward. How does a president's credit score actually affect your wallet? It's a question worth exploring. It all comes down to something called consumer confidence. This is a crucial factor in the economy. Imagine this. You're a bank, and you need to decide who gets a loan. You have to weigh the risks and benefits carefully. Would you rather lend money to someone with a history of paying back their debts? Of course you would. Or someone who's known to skip out on payments. It's a no-brainer, right? The choice is obvious. Banks feel the same way about lending money to the government. They need to trust that their money will be repaid. If the president, the face of our nation, has a shaky credit history, it makes banks nervous. This uncertainty can have wide-reaching effects. And when banks get nervous, they charge higher interest rates. This is their way of protecting themselves from potential losses. Those higher rates trickle down to us, the everyday borrowers. We end up paying more for loans. Suddenly, that car loan or that mortgage becomes more expensive. This can put a strain on personal finances. And what happens when borrowing becomes more expensive? People spend less. Businesses make less money. This can lead to a slowdown in economic activity. And the whole economy slows down. See, it's all connected. The ripple effects of a president's credit score can be far-reaching, impacting everyone. The power of perception, from Wall Street to Main Street. Now let's talk about perception. In the world of finance, perception is everything. If investors around the world see America as financially unstable, they get worried. And when investors get worried, they pull their money out of the US economy. This can lead to a drop in the stock market, which can impact everyone's retirement savings. It can also make the dollar weaker compared to other currencies. This means that things we import from other countries, like electronics and clothing, become more expensive. So, even if your personal credit score is excellent, a president's poor credit history can still pack a punch to your wallet. It's a domino effect that starts at the top and trickles all the way down. Section 4. Credit Scores Deconstructed, the Building Blocks of Trust. In this section, we will break down the essential components that make up your credit score and why they matter. Okay, pop quiz time. What actually makes up a credit score? Let's dive into the details. There are a few key ingredients: payment history, amounts owed, length of credit history, new credit, and credit mix. Each of these factors plays a crucial role in determining your overall credit score. Payment history is pretty self-explanatory. It shows whether you pay your bills on time. Do you pay your bills on time? If yes, good job. This is one of the most important factors. Amounts owed refer to how much debt you have compared to your credit limit. This is also known as your credit utilization ratio. The less debt you have, the better. Keeping your balances low can positively impact your score. Length of credit history is just that, how long you've been using credit responsibly. The longer, the better. New credit refers to how often you open new credit cards or take out loans. Be cautious, as too many new accounts can lower your score. And finally, credit mix is about having different types of credit, like credit cards and mortgages. A healthy mix shows you can manage different types of debt. This diversity can boost your credit score. Understanding these building blocks can help you take control of your financial future and build a strong credit score. Section 5. The Trump Effect, a ripple in the credit pond. Now, let's bring Trump back into the picture. His financial history has been a bit of a roller coaster with both successes and, let's call them, learning experiences. While we don't know his exact credit score, we do know that his businesses have filed for bankruptcy multiple times. Now, bankruptcy doesn't mean you're a bad person. but it does raise questions about financial management skills. And when those questions are raised about the person leading the country, it can create uncertainty in the markets. This uncertainty can lead to investors becoming cautious and hesitant to invest in the U.S. economy. As we've learned, that hesitation can trickle down and affect everything from interest rates to the prices we pay for goods and services. Section 6. Understanding your score, your key to financial freedom. Look, we're not saying that a president's credit score is the be-all and end-all of the economy, but it's a significant factor that can influence everything from interest rates to consumer confidence. The takeaway here is that understanding credit scores is crucial, not just for presidents, but for all of us. Your credit score is your financial report card. It tells lenders how responsible you are with money and whether you're likely to repay your debts. A good credit score can open doors to lower interest rates, better loan terms, and even better job opportunities. On the flip side, a poor credit score can make it challenging to rent an apartment, get approved for a credit card, or secure a loan with favorable terms. Section 7. Join the conversation. Your credit story matters. So, what do you think? Does a president's credit score matter to you? Have you ever considered how their financial decisions could be impacting your own wallet? Share your thoughts. This is a conversation that affects all of us, so let's keep it going. And remember, there are resources available to help you improve your credit score and take control of your financial future. Don't be afraid to seek them out and start building a brighter financial future for yourself. Remember, your credit story is important. Take action today to secure a better tomorrow. Thanks for watching, and don't forget to like, share, and subscribe for more insights on how financial decisions impact your life.